Russia has cut interest rates again, which is the fourth time in the past 5 months. This is despite the fact that inflation is still at an elevated level and the labour market remains very tight. Under normal circumstances, these conditions would argue for keeping rates higher or potentially even increasing them. The decision to cut rates suggests that supporting economic activity is now seen as the more pressing priority for Russia. Russia's switch to a wartime economy, which has driven growth for the past 2 years, looks to be grinding to a halt. Hi, welcome back to the channel. As you've just heard, Russia has cut interest rates for the fourth time in the last 5 months. You can see from this chart the change in direction of interest rate movements over the past 3 years. Back in 2023, Russia embarked on a series of interest rate increases. And one of the reasons for that was because at that time, inflation was getting out of control, and the Russian central bank wanted to bring it back under control by increasing interest rates, which, as you'll know if you follow the channel, when you increase interest rates, it makes borrowing more expensive. Therefore, it puts consumers and businesses off borrowing any more money, because if you're having to pay over 20% interest on any money that you've taken on as debt, then you need to have a really good internal rate of return for that investment for it to pay off. So when you increase interest rates, generally speaking, it reduces the amount of spending, it reduces demand, and therefore prices start to come back down. So when you look at what's happened over the past few months, you would expect that inflation has started falling rapidly because rates are coming down. However, that isn't the situation in Russia at the moment. If we look at what's been going on with inflation, you can see that over the past 3 years, inflation has been a persistent problem for Russia. And since the middle of 2023, when it fell to an unexpectedly low level that nobody can explain, so I won't even attempt to do so, inflation has been up above 8%. And when you consider that the Russian central bank's target rate is 4%, that's double where it wants to be. Now, when you compare that to countries like the USA and the UK, where the target rate is 2%, so Russia's already double those economies. When they see inflation rising, they increase interest rates to bring everything back under control. But if you look at what's happened over the past couple of years, interest rates were rising in 2024, which was when we saw all those interest rate increases being implemented by the bank to try to bring spending back under control. And if we look at 2025, inflation actually got up over 10%. So that's very high for a developed economy. Over the past few months, it has come down slowly, but it's still sitting above 8%. So it's still more than double where the Russian central bank wants it to be. And if we take a look at how Russia's inflation rate of 8% compares to the rest of the G20 at the moment, you can see that there are only 2 countries that have higher inflation: Turkey, where it's above 33%, and Argentina, where it's just under 32%. Now, if you follow the channel, you'll know that both of those countries have got long-standing economic problems. So the fact that inflation is so high is a reflection of that. But Russia is ranked at number 3 in the G20. That tells us that there are serious problems in the Russian economy right now. When you look at Brazil as the 4th highest, it's only got inflation of around about 5%. And then every other country in the G20, inflation currently is less than 4%. So what this shows us is that this isn't a global phenomenon. Inflation isn't high all around the world like it was after the COVID-19 pandemic, when we had shortages and price increases all across the globe. Nobody could really control that inflation. It was basically a global phenomenon. This isn't that situation. Russia's inflation is self-inflicted. It's partly due to the fact that the sanctions are increasing both the cost of any imports and also the availability of products. So there's shortages of certain items, which pushes prices up, and also the switch to being a wartime economy, which has really driven up wages and price of everything in Russia. And if we have a look at how Russia's interest rate of 16.5%, which is incredibly high. If you think about taking out a loan, if you went to your bank and they said, yes, we'd be happy to give you a loan, the interest rate is going to be 20% on your loan, which was basically 16.5% plus a profit margin for the bank of 3.5%. I don't think you'd want to take that loan. That's basically credit card type lending, it's loan shark type lending. So it really does discourage anybody from taking a loan out. And if we look at how that rate of 16.5 compares to the rest of the G20, not surprisingly, the only two countries where interest rates are higher are Turkey and Argentina, where they're at almost 40% in Turkey and 29% in Argentina. The next highest rate is Brazil at 15%. And then every other country in the G20 has interest rates of 7.5% or less. And most of the developed world, so if we look at the USA, it's sitting at around 4%, as it is in the United Kingdom. Australia, it's 3.6, Canada, 2.5. And then down the bottom, you can see that Switzerland at the moment has a rate of 0%. So once again, this isn't a global phenomenon. And if we just compare where Russia is sitting in the rest of the world table, you can see that it's actually showing in the top 20, and it's alongside countries such as Congo, Gambia, Haiti, and it's got a higher rate than Liberia, Ukraine, and Brazil. So I don't think Russia would want to benchmark itself against those countries if it was sort of trying to compare its economy against the best in the world. It's basically right at the bottom of the league tables at the moment. So why is Russia reducing its interest rates at a time when inflation is still a major problem? Well, this is all down to the growth of the economy. And the IMF recently downgraded Russia's 2025 GDP growth forecast to 0.6%. Now, when you compare that to Russia's actual growth in 2024 of 4.3%, we're talking a collapse here. You've gone from more than 4% growth in one year to less than 1% the next year. Now, Russia is still forecasting 1% for this year, but I think that will be revised downwards. But originally, it was hoping to achieve 2.5% to 3% for 2025. So things are starting to go really wrong in the Russian economy. And one of the reasons for this is what's happening with regards to this switch to the wartime economy. So we've talked about this before, but I just wanted to touch on it again. This is what's been happening with real wages in Russia over the past 12 months. Well, I say over the past 12 months. Russia hasn't actually published any figures since July, so we haven't seen the August or September figures. And that tells me that potentially those figures are looking worse than what we're seeing here. But if we just look at what's been going on, since March, there has been a real increase in real wages. And the latest figures that we have show that they increased by 6.6%. Now, whilst you might be thinking, well, 6.6%, that's less than inflation, this is real wages. So this is over and above what's going on with inflation. So when you add that 6.6% to 8% inflation, that means that real wages are going up by around 14%. So that's a lot higher than inflation. And that's one of the things that's actually fueling inflation in the economy, because the wartime switch means that any company that's being sponsored directly by the Kremlin knows that it's got guaranteed revenue as long as it delivers whatever it's producing for the war effort. And so those companies have been offering higher wages to attract in more staff to make sure that they're maximizing their output and their productivity. And that's pushed up wages across the board. And that's one of the reasons why a lot of civilian companies that aren't involved in the war effort are now struggling. I recently posted a video talking about the fact that AutoVAZ, the big car manufacturer that makes Lada, has had to cut back to a 4-day working week, as have a variety of other companies in Russia, because they're not making enough profit and wages are going up. And so they're struggling to balance the books. And so they're cutting back on the working week to try to reduce their wage bill at a time when they're making losses. So this increase in wages is causing a big problem for Russia. And the other problem is that they don't have enough staff. So if we look at what's been going on with unemployment over the past 3 years, you can see a sharp downward trend here. 3 years ago, unemployment was sitting at around about 3.8%. It's now down to 2.1%, which is the lowest level in Russia's history. And that's not a good thing. So you might be thinking, well, low unemployment, that's great because everybody's got a job. The problem with low unemployment in Russia isn't that everybody's got a job. It's there aren't enough people to fill all of the vacancies. So they've got low levels of unemployment because they don't have enough working people to actually fill all of those jobs. So that's a big problem, because how do you fix that? You need to attract in migrants. You need to bring in people from overseas. But I don't think a lot of people are looking to emigrate to Russia right now, because one of the reasons is that people are still worried about being conscripted to go and be forced to fight in Ukraine. So real wages and unemployment are a major problem, but the other big issue is the economy is now stalling because you can only self-fund your war economy for a certain amount of time. Russia has been doing that using its national wealth fund. So it's been drawing on its reserves to pay all of these companies. But there's no return on that investment. It's not the same as issuing grants to companies to open up new facilities and develop new factories and all of those sorts of things, because at some point you see a return on that, because as those new factories open and they start making more sales, then they will pay more tax to the state and GDP will grow. When you're using your savings to invest into a war where there is no upside, there is no return on the investment, then eventually you'll just run out of capital because there's no growth being formed from that investment. And so it's just dead money, literally. So from Russia's point of view, they've got a real problem. And I talked about this in a recent video, that the latest figures for September, industrial output has only grown by 0.3% compared with 5% in the previous 12 months. So that's more than a 10 times fall. Manufacturing output has grown by 0.4% compared with 9% the previous year. And fabricated metal products, which are being used in the war effort, that actually fell by 1.6% compared with a 30% growth in the previous 12 months. So what we are seeing is across the board, all of these different growth factors that were really boosting the economy over the past couple of years are now starting to falter. So Russia can't keep going at the pace it has been over the past few years, and the civilian companies that are having to fend for themselves are struggling. They're cutting back on their number of working hours, which means their productivity is going down. They're struggling to hire enough staff anyway because of the wage increases. So all of this is becoming a nightmare, and it's really interesting that the Russian central bank has cut rates 4 times in the last 5 months, despite the fact that inflation is still out of control. It's still double the rate that it wants it to be. But that's no longer the top priority. The main focus for Russia is to try to get the economy going again, because as it stands at the moment, it is coming to a grinding halt. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking about what's happening with inflation and interest rates for a long time in Russia. And what we're seeing is that Russia is now ignoring the traditional model. Usually when you've got high inflation that you're trying to bring back under control, the one thing that you would do is increase interest rates. And that's exactly what Russia was doing from the end of 2023 throughout 2024. However, as the wartime economy started to run out of steam and was no longer bringing the GDP growth that Russia was looking for, it decided to change tack and abandon the attack on inflation and try to boost growth. So over the past 5 months, we have seen 4 consecutive cuts in interest rates, the latest one being to 16.5%, to try to boost the economy. But the problem that Russia has is that 16.5% is still prohibitively high. It's one of the highest in the G20. It's one of the highest in the world. So that's not really going to cut it. If you're a company or an individual in Russia and you see that rates have come down from 17% to 16.5%, I don't think you'd be rushing to the bank to take out a loan. That's not really a material change. Unless interest rates come down to maybe 5%, I don't see a huge increase in demand for borrowing. And without that increase in demand for borrowing, there won't be any investment, there won't be any capital injections into the Russian companies. And of course, Russian businesses are struggling because they can't get overseas investment. Unlike companies in the USA, if you're looking to raise capital, you can issue a bond or take out a loan. You might go overseas for that. You might go to fund managers. You've got lots of different options. Russia have a very limited number of options at the moment. So Russian businesses are struggling, and the Russian economy is now starting to come to a grinding halt, as I mentioned earlier, because it can't get any investment, it can't borrow money at a reasonable rate. So companies are scaling back at the same time as they're facing problems with cost increases as a result of the move to the wartime economy, which has driven up wages across the board in Russia. And of course, Russia is now running short of funding because it's been using the National Wealth Fund for the last 2 years to fund this switch to the wartime economy, but that can't last forever. Those companies are not actually making any income. They're not selling things to anybody apart from the Kremlin. So this is an internal circular movement of cash from the savings account to all of these companies. So these companies are doing well on paper. That's what's been driving the growth in the Russian economy over the past couple of years. But that can't last. It's a balance sheet movement that doesn't really represent any real growth. And at the same time, real companies in Russia have been struggling because of the sanctions. They can't access the same markets as they used to for their sales, and they're also struggling to buy in components and raw materials. And the walls are closing in terms of those sanctions. They are getting tighter and tighter. And oil and gas sales are now at threat because China and India are worried that they're going to be hit with secondary sanctions. So all of this represents serious bad news for Russia. And I wanted to post this video really to give you an update on what the Russian central bank has done, cutting rates. And this is a reflection of the fact that growth is now down to a very low level. It's forecast to be 0.6% for the whole of 2025. However, it might even be less than that if we start to see Russia losing its sales to India and China of all of that oil, because if it doesn't make all of the money for the rest of 2025, we could see that growth actually going into losses. It could be a contraction in the Russian economy within the next few months. So hopefully you've enjoyed today's video. You found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Subscribe if you haven't done so already, really would appreciate that. And thank you so much to everyone supporting me. If you've bought me a coffee or sent me a YouTube super thanks or signed up as a Patreon or a member or a Buy Me Coffee member, thank you for that support. Really means a lot to me. And here's something to put a smile on your face.